Would I go in there and get a loan or raise money for investors? I think if I was doing my first project, I might prove it with going in there and getting a loan. Although for most people it's super uncomfortable going into the banks, like going to court and being interrogated. I would always go to investors because you can go on, do numbers and numbers and numbers of projects. There's so much money out there available for you to get access to.
Okay, so the advantage of a loan is they don't own you. When you pay the loan back, you're done and 100% of the business is yours. So if you're going to borrow money, you just need to make sure that the business is viable and that you're going to be able to pay it back. If you're not sure, then don't borrow it. With investors, if you take money from them, they're generally going to want some profit share, some payback, but they're also going to want to own a part of the business. And now you're connected to these people indefinitely, even if long after you've made way more money than they put into it, and you're still, again, you're the one doing all the work. So my suggestion is make sure you understand why you're using the money or what you're getting the money for and how it's going to be used. If you want to do something risky that you're not sure it's going to work, well, with investor money, you don't have to worry about paying it back if it doesn't work. So there's that advantage. But if it does work out well, now you've got partners forever. So it's, again, not a one or the other. One's better, one's worse, or always do one, never do the other. It just depends on the circumstances and what you see for the long-term outcome of the business and what you're willing to take on as far as risk. With the bank, when you borrow, you're going to have to pay it back whether the business works out or not. With investors, if it doesn't work out, you don't have to pay it back. But if it does work out, you've got partners you may not want for longer than you want them.